Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 21st of June. Bank of Japan minutes reveal concerns about foreign risks. Overnight, the Bank of Japan released the minutes of its April policy meeting, where officials remained on hold, surprising many investors who expected them to introduce additional easing. The minutes did not include anything particularly new on Japan's economic outlook, but showed that the members discussed the risks arising from increased uncertainty in overseas economies. The minutes came one day after Governor Kuroda reiterated that the Bank of Japan will not hesitate to add further stimulus if its inflation goal is threatened. Something like that may happen if Britons choose to divorce the EU, as the yen could strengthen notably given its safe haven status, thereby threatening the Bank of Japan's inflation goal. In such a case, we believe that policy tools other than direct FX intervention may have limited capacity to curb the yen's potential strength. This was evident after the introduction of negative interest rates in January, which failed to materially weaken the yen. We therefore maintain the view that the likelihood for Bank of Japan intervention in the FX market could rise substantially if the UK opts to leave the EU. The RBA released the minutes from its latest policy meeting as well. The minutes showed an overall upbeat tone regarding the Australian economy, offering no clues for further reductions to the cash rate. However, officials noted that the appreciation of the Aussie could complicate the economy's adjustment to the lower terms of trade. Given that the minutes were in line with the meeting statement where policymakers refrained from commenting on further easing, we believe that the bank is likely to remain on hold at its upcoming gathering in July. Nevertheless, having in mind that the bank responded immediately to the decline in the first quarter inflation rate by cutting rates back in May, we believe that the second quarter CPI print may be a critical factor for officials to consider when they meet in August. As for today's highlights, during the European Day, we get Germany's ZEW survey for June, and expectations are for a decline in both indices. We believe that the UK referendum-related uncertainty that has dominated market sentiment in recent days is likely to have been felt by German economists. And decline in both indices could reverse some of the euro's recent gains, at least at the release. In the US, Fed Chair Yellen will deliver her semi-annual Humphrey-Hawkins testimony before the Senate's Banking Committee. Tomorrow, Yellen is scheduled to testify before Congress as well. Given that the Fed chief has already expressed her view on monetary policy at the June FOMC meeting, we don't expect these speeches to materially affect investors' expectations for the Fed's rate path. We expect her to reaffirm the cautiously optimistic tone we heard at the gathering, indicating that the committee needs to see evidence that the recent setback in the data was only temporary before making another rate move. Although we expect her to try and keep a balanced stance, we believe that lawmakers may try to back her into a corner in the Q&A session in order to give further hints on how high the possibility for a July action is. Besides Chair Yellen, we don't have any other speakers scheduled for today. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.